The spread of the coronavirus has pushed the pause button on one of the world's biggest economic powerhouses.
We're coming on the air at this hour with breaking news there. Wall Street ending one of the worst weeks of trading since the financial crisis in 2008.
We're starting to get to that point where those supply chains are going to have massive disruptions.
When the world was first hit with SARS almost 20 years ago, it caused an economic blip, mostly for China and its neighboring countries. But at the time, China's gross domestic product was only 4% of the global total. It now stands at 16%, making China the second largest economy behind the US. One major driver behind China's economic rise was its massive network of factories, which churn out everything from t-shirts to mobile phones for consumers all over the world. Today, China makes up a third of world manufacturing and is the world's largest exporter. Decades of globalization have created supply chains so deeply interconnected that when there are issues in China's economy, it's felt across the globe.
We're in a situation where China, the shutdown in various factories and other places of work has meant that China isn't producing various bits that may well be vital inputs into production in other economies. So that is causing ripple through effects a lot around global supply chains.
In an effort to halt the spread of coronavirus, Wuhan, China, the epicenter of the virus, was sealed off. And China mandated factory shutdowns across most of its provinces. Hyundai Motors had to suspend production in South Korea in early February, after not receiving parts it usually gets from China. Apple felt the crunch as well. While the company designs and sells the iPhone, it doesn't manufacture its components. It relies on a complex web of facilities throughout the world to source its parts, with a heavy reliance on China. Due to the coronavirus impact, Apple has warned that sales are expected to fall short of target since fewer iPhones will be available for sale. While these are some high-profile cases, the hysteria around coronavirus has made investors nervous. The last week of February saw the US stock market suffer its worst week since the global financial crisis of 2008. The US and the Canadian central banks have slashed interest rates by 0.5 percentage point in response to mounting economic concerns. And the Organization for Economic Cooperation and Development said global growth could be cut in half to 1.5% in 2020 if the virus continues to spread. But as of now, the spread of the coronavirus is too unpredictable. Economists say for a recession to happen, the coronavirus would have to reach pandemic levels. Whether or not that happens is still unknown.
What we are wrestling with is uncertainty, and that defines our projections, which at this point lead us to state that global growth in 2020 will dip below its last year's levels, but how far it will fall and how long the impact would be is still difficult to predict.
So how the coronavirus will truly impact the world economy will heavily depend not only on its severity or duration, but also on whether consumers start to change their spending behaviors based on that fear. Thanks for watching. To stay up to date on the latest breaking national and international news, be sure to subscribe to our channel.